Hello, my name is Julia and this is Fix My Finance. In today's video, we will be talking about overdrafts, what they are, how they work, and how you can use your overdraft without breaking the bank. So, let's get into it. An overdraft is when you borrow money from your bank through your current account. It is when your current account balance becomes negative because you are using money that you haven't yet earned. As such, it is probably the most accessible type of debt, but it can be really expensive to use. It is important to distinguish between two different types of overdraft, authorized and unauthorized overdrafts. Authorized overdrafts are arranged in advance, so they're also known as arranged overdrafts. You agree to a borrowing limit with your bank, and you can spend money up to that limit through all your normal payment methods. Unauthorized overdrafts are also known as unplanned or unarranged overdrafts and happen when you spend more than you have in your bank account without agreeing to it in advance. This can also happen if your bank has agreed to an overdraft for you, but you go over the limit that they have set. Overdrafts can be useful for some people and help you avoid fees from bounced payments for bills that happen when your account doesn't have enough money in it. This is most likely to happen with automated withdrawals or direct debits at the end of the month, if you haven't gotten paid yet. Overdrafts should only be an emergency fund or short-term credit option. If you're using your overdraft regularly, you should look into alternative borrowing options, like credit cards, to help you save money on interest. So how expensive are overdrafts really? Historically, overdrafts could have associated fixed fees and interest payments, making unauthorized overdrafts particularly expensive. In some cases, unarranged overdraft fees could be more than 10 times as high as fees for payday loans. In fact, in 2017, firms made over £2.4 billion from overdrafts alone, with around 30% of this revenue coming from unarranged overdrafts. Yes, that's right, firms made over £2.4 billion from overdrafts alone. What's more is that 50% of banks' unarranged overdraft fees came from just 1.5% of customers. To this effect, the Financial Conduct Authority, the UK regulator, is enforcing new rules on overdraft charges starting on the 6th of April 2020 to protect consumers. This new regulation will ban fixed fees for overdrafts, ending fixed daily or monthly charges. It will also stop banks from charging higher prices for unarranged overdrafts than for arranged ones. Banks will be required to advertise arranged overdraft prices with an APR to help customers compare them against other products, like credit cards or personal loans. In addition, the FCA will require banks to do more work upfront to identify customers who are showing signs of financial strain or are in financial difficulty. This is to develop and implement a strategy to reduce repeat overdraft use. Now, I realize that was a lot of financial information in one go, so what does this actually mean for you? In the new world, banks will have a higher interest rate on the overdraft, but no fee. For smaller sums and shorter durations of borrowing money, this makes the cost of borrowing a lot cheaper. Imagine you are overdrawn by £100 through an unarranged overdraft. In the old world, this would have cost you an average of £5 per day. But today, under the new regulations, it will be under 10p per day. This is a huge cost saving of £4.50 per day. This is similar for arranged overdrafts. On average, customers use a £250 arranged overdraft for over 7 days. This used to cost up to £7, but at the new rules, it will only be £1.65 in total. So clearly, the new regulation will help people using overdrafts for emergencies and save them considerable sums of money. However, for people using overdrafts perpetually, or for a long period of time, this will become very expensive at an average APR of 39.9%. Instead, it can be beneficial to check if you're eligible for a 0% money transfer credit card. There are a few specialist money transfer credit cards which let you pay cash into your bank so you can pay off your overdraft, and then you owe this money instead. There are also some banks that come with a 0% overdraft for the first year, like First Direct or Nationwide's Flex Direct account. Switching to these current accounts could help you save if you know there's a chance that you will make use of your overdraft regularly. So, to summarize, overdrafts are when you go into a negative balance on your current account, and you're essentially taking a loan from your bank. The regulation around interest payments is changing in April and will make these products a lot more affordable for consumers using them as a small and short-term way of borrowing. Overdrafts can be useful to avoid automated transaction bouncing if you have direct debits like utilities payments set up, but they shouldn't be used as means for long-term borrowing. For this, you should compare your cheapest credit cards and personal loan products instead to actively save money. I hope this video was helpful in giving you an understanding of bank overdrafts. If you learned something new today, please give the video a like, share and subscribe for more content. If you have any comments, don't hesitate to leave them in the comment section down below. And I will see you here next time, when it's time to fix some finances.